There's a lot of contradictions happening out there in the market. We're going to talk about it on Today in Mortgages. Hey, what's going on, everybody? Welcome back to the show where we're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of real estate and mortgage news today. It is Today in Mortgage. I got my trusty co-host, Rich Jefferson, here with me today. Rich, you live in a world of contradictions. How are things going for you?
I'm confused.
Tell you what, join the club, Rich. So we're talking about an article today from realtor.com. It says, confused by the housing market, you're not alone. So, Rich, it's good to know that we're not alone. And they're going to try to explain some of these things to us, but I wanted to talk through some of those with you, and people can check out the article for themselves in the link below. But the first thing that we're talking about here is that home prices continue to go up despite affordability problems out there in the marketplace. Rich, we kind of talked about this, a lot, but let's just touch on it. What is going on out there with home prices, and why haven't they dipped like some people thought they would?
Because the demand is too strong.
Yeah.
That's it. For the same reason we can't get inflation under control. There's money out there to be spent. There's younger people that want to own a home, and there's just not enough homes.
A lot of people out there in the market, with economists, thought that as these prices rose, it would take up a greater share of income and would not be affordable for households. But what we're seeing is that people are just making it work. The people that can make it work are making it work, and there's not enough homes out there for the people that can't make it work anyways. So the demand is staying high. And so we got a tiny dip about 6 months ago, and then prices have pretty much recovered and gone past where they were kind of at their peak middle of last year. So it's been super interesting to see, and it's definitely kept the demand high and made things tough kind of all around. So the key stat that we saw on that was that the sale of existing homes, which excludes new construction, dropped 16.6 year over year in July. That's a big number, Rich. Haven't been around that long. When's the last time, if ever, you saw a dip that big year over year?
We haven't seen it. Again, it's that locked in effect that I really despise talking about, but it is a real thing. Like, if I wanted to move to someplace cooler other than Phoenix, Arizona, maybe I'm going to choose Denver, but am I going to choose Denver to go up there, relocate my family to get a nice, cool spot to live in and pay an additional, 5% in interest rate? Probably not. I'm not going to do that. I'm going to push it off. I'm going to delay it because that's not an immediate need. That's a convenience for me.
When you're talking about cooler, you saying cooler weather or cooler vibes up in Denver?
Both.
I don't know. Phoenix is pretty cool. All right. So moving on to the next kind of contradiction that this article talks about. So we're talking about rates, right? Rates in some people's minds should be lower than they are. And This article is mentioning the spread between mortgage rates and the 10-year treasury note. I'm not sure that is legitimate. Rich, can you talk a little bit more about this spread and what that means and where we have to make that margin?
In normal years, in my 28 years in the business, I could generally see where interest rates are going to be based on the 10-year treasury. It's usually a 1 3/4 to a 2% spread. So if the 10-year is trading at 3.5, then you're going to be in the high fives. That's generally what it's going to be, or mid fives rather. So the problem today is it's not normal. We don't have a lot of investors when these mortgage-backed securities, these bonds, the yield low, they need to get a high interest rate to basically entice investors to buy them. So, and then you have the problem, okay, so they're going to pay a premium for a mortgage-backed security, knowing a large percentage of those borrowers are going to be paying off before they get their return on investment. So therefore it's a loss for them. So it's the premiums aren't there for an investor to risk to get the return. They're just not there right now today.
And Rich, by payoff, you mean like they're going to have the opportunity to refinance in the next, 18 months. And therefore, someone buying that bundle of loans is just really not worth it for them.
It's not, because they feel it's runoff, and it'll run off to go refinance before they get a chance to get their return on investment. That's just standard business.
Yeah, which is why we're kind of seeing that premium markup, if you will, on what the
Hmm.
interest rate is that the consumer's paying and that we can offer the consumers. So, yeah, I mean, it would be nice, right, if that spread stayed consistent and we were able to lower our rates, but that's just not the reality that we're in with kind of the current market environment.
Yeah.
So, last thing on here is talking about new construction. So, it says new construction doesn't normally win in kind of these high rate environments, but that's flopped a little bit. So, Rich, how and why has the construction market competed against the existing home sales market?
Well, people aren't listing the existing homes; they're staying put. And new construction, it's going to be heyday for new construction for the next 10 or 20 years, because there's, again, we talked about the inventory. Even if we get a bunch more inventory in existing homes, we still need a bunch of new builds. So, the new builds, I mean, at one point, a couple of months ago, it was over 30% of all purchase loans were new build. And that's not going to change. We need those homes. We haven't been building enough homes for the last 20 years. We need to catch up, and catching up takes a lot longer than to just sit aside and not build. Catching up, you got a price to pay, because it takes a long time to build homes, especially when they're actually scraping land, putting in all the utilities. Like these are big investments as these builders are making, and it's not easy. So that takes time. So new builds are growing. They will continue to grow. And it's a good opportunity. It's a good time for them right now.
Yeah, Rich, I think it was last month that we talked about the big investments that Warren Buffett was making in the space. And so obviously there's money to be made and investments to be made in that area. And hopefully, they catch up a little bit like you're talking about, and we get some more stuff on the market to get more people in the home. So something to look forward to. But yeah, there is a lot of contradictions in the market right now. And I think there is still a lot of confusion out there. And so it's our job as professionals to kind of coach people through those things that aren't dealing with this market every day. So, Rich, you're always coaching our people on how to do that. And what are some of the things that we're talking about with our people on how to relay some of the more complex messages to the consumers out there?
Well, we're trying not to relay complex messages. What we're trying to do is kind of do our research and understand, so that we can help our borrowers understand. We don't need to go deep. All borrowers need to understand is the economy is good. The demand for housing is great. Like on the market, everybody wants to buy a home. There's a limited amount of property. So, your purchase price is permanent. Don't wait for rates to drop so that you can get a lower price home. It's not going to happen. You're going to wait for interest rates to drop, and who knows when that happens. Meanwhile, the appreciation in homes is happening. So the longer you wait, the more expensive the permanent piece is, the purchase price. Even if the interest rate is a little bit lower, get your purchase price today, qualify for the interest rate on the market today, and refinance in 18 months and save some money, because rates will not stay this high. The economy overall will not run like this with interest rates this high.
Good word, Rich. Yeah, that's something that you can do to be coaching your people now. And something else that you can be doing to get ahead with your clients and your marketing is download our free resource that we've made available to you on our website, todaymortgages.com/marketing. You can go check that out. It is 5 free ways to get ahead while the market is down. We've had that resource up for longer than we have liked, because as we're talking about today, things just kind of keep being a contradiction and keep being a little bit worse than we would hope they would be, but we're still optimistic about the future, especially here at Never Funding, where we're coaching our people to win despite the circumstances. So, Rich, any last things you want to say? This covered a lot of ground, a lot of things that we talked about here, but anything you want to say on this article or some of the topics that we covered?
It's a good article. I mean, it is confusing for borrowers right now. It is, and they just need a trusted loan partner to work with and help them explain what's going on in the market. Somehow block out the noise. Focus on what you want as a home buyer, and trust somebody to hold your hand through the process. You will be happy.
Well, hey guys, thank you so much, all you out there, for watching and listening wherever you are. We appreciate you, and we will see you next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.